Some economists looking beyond the credit crisis are concerned that the massive stimuluses already pumped into the global economy by various governments may eventually see inflationary pressures coming back. It's this concern that's at least partly driving a further surge in the price of gold, confirming its status as a safe haven in times of economic turmoil. Business editor Greg Hoy reports.
Pure gold. For millennia it has held its glittering allure, even since the gold standard linking currencies to a fixed gold price ended 38 years ago. Gold has held its own in competition with modern moneymakers.
It's beautiful, but gold itself, of course, is it's very hard to find a replacement for it. And when the chips are down and the currency's disappeared or the government's changed it or whatever, gold is physical. It's no one's liability. If you've got some, it's yours.
It's a currency without country, and basically, it has always been used as a store of value against inflation.
A basket of goods which you could buy 50 years ago or 80 years ago or 150 years ago still costs about the same in terms of ounces of gold as it does now.
So, contrary to popular beliefs, the Great Gold Rush continues.
It was a phenomenon of the 1850s, but we had a second one in the 1890s, and we've been in the middle of a gold boom since the 1980s. We're still in one, our very third and largest gold boom.
Even across the 19th century gold fields, such fabled places as Kalgoorlie, Ballarat, Bendigo and the like, prospecting and production goes on. Deep beneath old Bendigo, amidst the labyrinth of 5,000 deep shafts, new exploratory tunnels are still driven in search of a eureka find.
Good rocks are good rocks, and in a sense that's where you find gold deposits, and so you'll find people will go to these areas where you've seen a lot of gold production and actually focus on those areas for future production.
Today, after China, Australia is ranked around second in global gold production with the United States, then South Africa. But Eldorados are increasingly elusive, according to Australia's largest gold producer, Newcrest Mining.
We're talking about steady state, or just slightly declining production. That's what we've seen over the last 10 years. If we look into the future, these deposits are getting harder, they're underground, they're deeper, they're lower grade. They're more expensive to bring into production. So I think the easy days in the gold industry in Australia are over.
While others are more optimistic, meantime the world's lust for gold relentlessly rises, defying pessimistic pronouncements that the golden age has passed. In fact, 7 years ago, then British Chancellor of the Exchequer, Gordon Brown, sold 2/3 of Britain's gold reserves, quoting economist John Maynard Keynes, who said gold, or the gold standard, was a barbarous relic. A delighted communist China bought Britain's bullion, following the old advice of Karl Marx.
Marx says in Capital that gold is the money of the world. So if you've learnt your economics from Karl Marx, you like gold. If you learnt your economics from Maynard Keynes, you don't like gold.
Australia's own Reserve Bank made the same costly mistake.
In Australia, 2/3 of our gold holdings were sold in 1997, and not the price, because it was saying one of the world's big gold producers, their central bank really doesn't have much faith in the industry.
I think Britain and Australia certainly sold at very low prices. I think history would show that they were probably not great decisions.
The Australian sales in 97 were at a price much lower than the Australian dollar gold price is now, about 1/3 of the price, or well over half the price that it is now.
That, of course, was a grave error. Had they still held their gold, and the billions of dollars more that they'd have in the Treasury would be very useful in this point in time.
The rising Australian dollar does complicate the comparison, but the gold price, though prone to volatility, has held up handsomely against most other asset classes over the past decade. In fact, if you've had your money invested in the Australian stock market, say, since the start of 2007, bad luck. You've lost on average 32% of your savings. If you've had the same money invested in gold, your savings have risen by 52.5%. Big difference, almost 85%. That's after the recent stock market recovery. Little wonder gold bars today are selling like hotcakes.
People want gold. Mainly because it helps their asset base. Everyone should have a piece of gold in their portfolio. Gold isn't going down in price like shares, it isn't going down in price like other assets, and therefore people want it. At a time of doom and gloom, we're booming at the moment, and it's because people want to buy gold.
Australia's biggest manufacturer and warehouse for gold bullion is the Perth Mint's 40% owned Australian Gold Refinery.
You could buy bars. We'll even store the gold for you in our depository, where you hand over a certain amount of money, a minimum of $10,000. We will hold that gold for you, and it will either appreciate or move with the gold price, and you can cash it in at any time. People from all over the world are storing gold with us. We have about $2.5 billion worth of gold at the moment.
On top of gold's safe haven status in troubled times, economists now expect, in the aftermath of the global financial crisis, a virulent re-emergence of inflation, inflamed by the debt-fuelled stimulus spending of so many governments and unprecedented money printing by others, debasing major currencies, inflaming inflation and so interest rates, which augurs well for gold.
The Chinese have just bought 454 tonnes of gold. They want to hedge against devaluation of US dollars or other currencies, their foreign currencies, so they've increased their gold reserve.
The US budget deficit this year is $1.8 trillion US dollars, or 13% of US GDP. So what's holding up the gold price now is the very, very large US budget deficit.
Our long-term view on gold is particularly bullish. We do think gold's going to push through $1,000 again and lead itself much higher.
Could it go above 1,000 to, areas into the 1,500? Yes. Depending on, the sort of volatility we see out there over the next 18 months. Inflation's going to be a big one. Watching inflation's going to be very important with the gold price.
Rather compelling pictures. Greg Hoy with that report.